Hello traders, welcome to the daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. Thursday, almost last day before end of the year, and actually scenario on the markets is the same. So not much of trading we are having right now, not much of a volatility. We had a small surprise yesterday on the euro dollar, for example, and all euro pairs, because euro went significantly lower, was much weaker than expectations, but the situation came back under control just a few hours after a decline. So this decline was erased as fast as it was created. Luckily, this slide and comeback created some good-looking trading opportunities. For example, on euro dollar, which I will show you in a second. But this daily analytical report, we will start with precious metals. So what do I have for you here on this chart is silver, and we'll start with silver because for the last day silver was fighting to come back above this horizontal support, as you can see here. You know this support because you're following us for a long time. They managed to go above the support, but now the last hour, it happened a few minutes ago, to be honest with you, the price of the silver declined, and as you can see now we are fighting on a short-term support here, okay, created by highs from yesterday, from 27th of December, from 22nd of December, and yes, from 22nd of December, 27th and 28th of December. So after, after breaking this resistance, now we are testing it as a closest support. If traders will manage to overcome this decline here, that will be a positive sign. That won't be a buy signal, because for a buy signal on silver, what we need is a price closing above the gray resistance here, the gray resistance on 60 point, maybe $20 per ounce, right? So for buy signal, we need price closing somewhere here. So far, sentiment is neutral. It's not negative, it's not positive, so you should, in my opinion, you should stay away from the silver. And you may ask me, so why are you showing us this setup? Because it can be a decent trading opportunity in the next few days, not now, but in the next few days. And again, that's the thing that differs us from other companies, from other trading educators. We spot a trading occasion which will be current, which will be actual in the next hours, few days, that you will be prepared and you will be able to benefit from this, instead of explaining what happened a week ago, 2 weeks ago, and discussing signals that are already late, already done, already used, right? So that's what we are focusing on, that you will be ready for an action here. If we are talking about silver, obviously we have to talk about gold. This breakout of this trend line seems sustainable at the moment. It looks alright, it looks promising. We stopped exactly here on the resistance created by lows from 12th of December. We tested this at first time when we were breaking from this downtrend. We are testing it again now. So far buy signal would be too early, but once the price will break this horizontal resistance here, we may think about opening short-term long positions. Why short-term? Because to the long-term long positions we still have a lot of room. I would say that for a long-term long position, the price would have to go above 38.2 Fibonacci here, so above $1,210 per ounce. As long as the price stays below this horizontal level, the long-term sentiment on gold is definitely negative. Okay, let's switch. As we are on commodities right now, on precious metals, let me tell you a little bit about oil. We usually analyze WTI, but now we're having Brent because most recently Brent is more technical than WTI. So what we are seeing on a Brent, we are seeing this head and shoulder formation, which was present in whole December. But as it often is, head and shoulder formation is in the same time a pennant or a symmetric triangle formation. Not always, but it often happens like that. So actually it can be both trend reversal pattern and trend continuation. So once you see the right shoulder is shaping, it's too early to open a position. I know many traders, they go for possibility, not for the probability. And the possibility that the trend will reverse is always on the table, but the probability of this action is very low. But traders do not care, they open short position anyway. When the price was here, it was too early to open short position, because to open short position I said that it would be nice to see a breakout of this line, and even more a breakout of this horizontal support. As long as the price stayed above the neckline and a horizontal support, the sentiment here was positive. And that's actually what we saw. So 2 days ago we had a bullish breakout. We broke the upper line connecting the top of the head and the top of the right shoulder, and now the price is advancing higher. The closest resistance is top of the head, and in my opinion we should get to this level soon. We had a nice buy signal yesterday on Nasdaq, but it was a false signal. So if we would enter a market here with a long position, we would lost money. Luckily we didn't. This drop was supported by sharp fall in Nvidia shares, but anyway it happened. So first we got a false breakout from the rectangle here, as it always happens when the false breakout is clear, and it was clear here. The price goes sharply the other way, and we can see a sharp decline here of 35 points. Sentiment is obviously still positive, and most probably traders will use either this horizontal support or the next one for a bounce. Okay, so the current scenario for Nasdaq is as following. So a bounce straight away from this horizontal support, or breakout, test of a deeper level, and bounce again. I would say there are no signs of a possible reversal whatsoever. So there are higher chances of a trend continuation than a trend change. Okay, we finished with commodities and indexes. Let's go to the forex market. Cable was having this flag, as you know, then a downswing, then after a downswing, rectangle. Rectangle is a trend continuation pattern, so rectangle was giving higher chances for a bearish breakout, and it happened, but as we can see, it's false so far. But comeback is not so strong because price is still making lower highs and lower lows, which is characteristic for a healthy downtrend. Actually, I would love to see if there is a trend, if there's a correction equality pattern here. Yes, it is. So as you can see, this correction was, to be precise, 78 pips. This one was 76, and this one so far is 76. If you believe in the correction equality patterns, we should see soon a breakout of this horizontal support, and if the price will break this horizontal support, I would say that sell signal will be very, very probable here. Another instrument, euro to Japanese yen. Actually, we created an analysis for euro to Japanese yen. I think we posted that on FX Street, where we said that the downswing is very probable, and that's what's happening. Why the downswing is probable? Correction equality patterns, 38.2 Fibonacci level. As you can see closer, head and shoulder formation, left shoulder, head, right shoulder, a breakout of a neckline here. Now we're just having a side trend, and I would say that making new lows, so the price going to this red cross, should activate a sell signal on this instrument. That's my view on euro to Japanese yen. Another instrument is euro to Australian dollar. Here we are fighting on the upper line of this rectangle, also on a trend line here. I don't like this kind of a price action here that I'm seeing. It's not technical. Yes, we do have a horizontal support. As long as the price stays above this horizontal support, the sentiment is neutral. Once the price will go below, sell positions will be on the table, and I don't want to say that breaking this level will trigger buy signal. I would rather wait for breaking of the trend line, so if the price will be here, that would activate the buy signal, but I wouldn't follow that anyway, because it's in the same time it's 38.2 Fibonacci level. And I do like this level, and I think it can act as a closest resistance. But the price has too many resistances ahead of itself that can potentially reverse this price here, this currency pair. Next one is euro to Canadian dollar. As you can see, this sharp drop on euro created actually a false breakout pattern here, but again this sharp drop was retraced. So actually this kind of price action is misleading very often. It's not caused by a large capital, by a large amount of investors, large amount of money. It's created more by the thin liquidity. And I don't think that technical relevance of those upswings breakouts is high. That is why I don't think we should follow those signals on many instruments. As you could see, traders who follow this bullish breakout are on loss. Those who followed false breakout rule are on loss as well. And actually the sentiment is mixed because the price is exactly on the resistance here, exactly in this yellow area, which shows the resistance on this instrument. Euro to British pound. I was having this ascending triangle, but is not having this ascending triangle anymore. Instead of ascending triangle, what we're having here is a rectangle. we're trying to break the upper line of the rectangle, which is not a surprise because we are saying that the price will try to get to this resistance here, and the price is trying to get to this resistance right here. Even this weakness of euro, which was seen yesterday on many pairs, didn't interfere with this situation on euro to British pound, which is still very bullish. Actually, we are also talking about that, writing an analysis on this instrument on our newsletter that we sent last Friday to our clients in Nigeria. We said that there are higher chances of an upswing on this instrument. New Zealand dollar to Japanese yen. What we are having here is a long-term sell signal created by this shooting star on a resistance. Traders already made some money on it, 150 pips, but the recent incline in this week creates an opportunity to sell with better prices, but it's a long-term opportunity and not very strong, so I'm not gonna telling you about this for a long time. What I would like to show you is euro dollar, one of our heroes of Trading Sniper, which I recorded before daily analytical report. If you don't know, Trading Sniper is a short video with the best trading occasions on the market right now. It is posted daily. And from this video you can see what are the hottest trading setups on the market according to the technical analysis and price action. And on euro dollar, you know that we had this double bottom formation, but they failed to trigger the buy signal from here. Then instead of a double bottom formation, we had trend continuation pattern, first a wedge, then a flag. We had a breakout, but it was just before Christmas, so as you can see, we cannot call it a proper breakout. It was more like a horizontal escape from this position, and price wasn't moving much, very low volatility, so it wasn't like a breakout, it was just a normal, they just got out of the technical pattern without creating a sell signal. But as you can see, yesterday price woke us up. We're a bit sleepy for the last few days on euro dollar, as you can see, sideways trend, and suddenly boom, suddenly 100 pips downswing. But as quickly as it was created, it was retraced. So price actually created a right shoulder formation of inverted head and shoulder formation, and is now aiming the closest resistance. This resistance, this green area, is a horizontal resistance. It's a neckline of this inverted head and shoulder formation. If we will see it like that, left shoulder, head, right shoulder. When buyers will manage to break this resistance, the price should get here, 45 pips higher. And only after breaking this orange resistance, we will be able to think about short-term buy signal. So far, I don't think that it's possible to go higher now, but we'll see what will happen here on this resistance. Very important, to be precise, 1.0 52, yeah, 52. That will be the real test of the sentiment on euro dollar. Again, don't enter the market right now with the long position, because the signal from the head and shoulder formation is not created yet from inverted head and shoulder. it will be triggered, it will be on the table once the price will break the neckline. So far the price didn't break the neckline, so there is no signal whatsoever. New Zealand dollar to American dollar. Here very interesting situation, because now we are testing the closest resistance as a new closest recent support as a new resistance, right? So one of the principles of the price action trading, that broken support becomes a resistance. Is the support relevant? Yes, it is. You have to admit that it was a support in June, July, November. After the breakout, now we are able to test it as the closest resistance. So far, test is positive for sellers. As you can see, we have a first reaction of 17 pips. It is not much, but still for a market like that, so market with a low liquidity, low volatility, this 17 pips can be called significant. But what the most important is that now we are having a price action scenario, so broken support becomes a resistance and we have a reaction on it. We'll see if it will be sustainable, or maybe we'll have a second attempt for this resistance. I'm a fan of second attempts and third attempts. I don't think that that will be just one try and the price will go up. No, will go down. I think that they will go down a little bit and try to force this level again, and after that we'll have a breakout, something like that. Price likes to test resistances and supports twice or three times, so I wouldn't be surprised if that was the case this time as well. American dollar to Canadian dollar, also instrument mentioned on a trading sniper. So what we're having here is a downtrend. Downtrend has a correction. It is still a correction. I know that the downtrend was lasted for only 4 months, right? Only 4 months, and correction lasts for longer. 1, 2, 3, 4, 5, 6, 7, 8 months. But it's usually like that bulls climb the stairs and bears go with the elevator. And I was saying that the sell sentiment is still on as long as the price stays below 50%. Was that an important resistance? Yes, it is, because you can see a reaction here. Price tried to break that for the second time. First time was in the middle of November, and they failed, and now the price is declining. Also, I wouldn't be surprised this kind of movement, and here if we would see another retracement, in my opinion that would open as short trade opportunity on American dollar to Canadian dollar. First reaction, yes, it is promising, but again, in my opinion, we can see the second test. Australian dollar to Canadian dollar. Yesterday on a daily chart we created very nice selling opportunity because the price tested recent support as a resistance and they failed. They created a shooting star candlestick, as you can see, but today traders are not following this signal. As you can see, this can be considered as a false breakout. Usually we should see a strong decline, but as you can see, the price is still advancing higher. What my opinion on this position is that I would wait with the short position for a breakout of this pink line, right? Because the price still can go a little bit higher, but if they will fail again, punishment will be very, very big from the seller's point of view. Okay, so I would wait for a breakout of this line connecting short-term higher lows. I would wait before I would open a short position here. Actually, let me check if those corrections are the same. No, this is a little bit smaller, but still 130 pips. This one is 118. So not the same. I won't tell you it's the same. I don't have to make that correction equality up. The enough examples that it works, so I won't use this one. Another instrument I would like to show is Australian dollar to American dollar, where our analysis is spot on for really the last 2 weeks. Downtrend, wedge, downtrend. We broke November lows, we aimed for lows from May, and as you can see, traders found that relevant, found that low significant, and we have a bounce. Rectangle on a support is a trend continuation pattern. So from this we should see a price going down. But really, to be honest with you, I wouldn't be surprised if we would see an upswing here, aiming recent resistance, recent support, testing this as a closest resistance, and after a positive test for sellers, I wouldn't be surprised if the price declined lower, right? That would be perfect from the price action point of view to see this kind of setup. Australian dollar to Swiss franc, not much going on here on this instrument, still defending this lower line of wedge. Canadian dollar to Swiss franc, still under the influence of this false breakout here, and the price is actually aiming lower, but it's not the signal I would like to trade, because as you know, as you could see, there are much better signals on the market right now. Canadian dollar to Japanese yen used the rectangle as a trend continuation pattern, right? Downtrend, rectangle, downtrend. So here you have an example how a rectangle can be a beautiful trend continuation pattern. Euro to New Zealand dollar, head and shoulder formation spotted by us yesterday. Downswing, correction, downswing. Beautiful display of price action trading. And the last instrument we have for this daily analytical report is American dollar to Mexican peso, where after the upswing we have a rectangle, another rectangle. But again, rectangles are very popular in times of low liquidity and low volatility, and this is Christmas time, right? So nobody's surprised that we're having rectangles all over the place. Short term, long term, it doesn't really matter. What matters is that the liquidity now is low. In addition to this, I would like to say that some of the breakouts which are now happening are not relevant from the technical point of view. You have to remember that, because those breakouts are not followed, are not caused by a big capital, by a big amount of money and a large group of traders. Those breakouts are caused more by thin liquidity, and you should always follow strong signals, signals created by large amount of money, not signals created by the fact that there is a low liquidity on the market. Okay, to wrap that up, let's finish with euro dollar and see how euro dollar is defending on a neckline. As you can see, first a contact with the neckline is for sellers. They created a reversal, but as long as the price stays somewhere here, there are high chances for a bullish breakout. Okay guys, thank you very much for watching daily analytical report. Remember to follow us on Twitter and our website alpari.news, and also remember that trading and investment in financial markets involves an element of risk. Thanks very much and bye.